what are the key financial statements? This is a pretty in-depth question, or it can be. Let's try to keep it as simple as possible in a couple of minutes here. The key financial statements that I'm assuming you're asking about is the three main ones that you should be reviewing on a monthly basis that kind of are core accounting, right? Or that you're taught in accounting 201 or 202, whatever your number was. The profit and loss statement or income statement, the balance sheet, and then the cash flow statement. So number one, the P&L, the profit and loss / income statement shows revenues, COGS, and expenses. So it basically shows your gross profit margin, your operating profit margin, EBITDA, net income, or other things at the bottom of it. Basically what that shows is month over month profitability of your business. This shows if you're able to sustain a business long-term, because you're seeing if you're losing money every month, if you're actually profitable, making money every month, etc. So this is a good position or a great document to understand long-term profitability. Is my business moving the right direction? Is revenue growing? Are my margins growing? Where are my expenses going, etc. Definitely profit and loss sheet. Number two, balance sheet. What that really is a snapshot of your business. Any point in time, any date of your business that shows assets, which are positive, good things, liabilities, which are not good things, because they're outflows, and then or debts owed. And then the last one is equity, which is basically money put in the business, plus year-over-year earnings, retained earnings, less any distributions or dividends that you took out of the business. So that's kind of a net number. I wouldn't really worry about that. For sake of a small business owner, assets, cash, accounts receivable, inventory, fixed assets, is that more positive than liabilities, accounts payable, credit card balances, loans, sales taxes payable, payroll taxes payable, etc. What you look at in that is, do I have positive balance or assets over liabilities? Are my liabilities higher than my assets? And specifically within there are my kind of current assets, right? My cash and AR, accounts receivable, like things that I can pay off or use in the short term, higher than my current liabilities, credit cards, payroll taxes, sales taxes, short-term loans, etc. Accounts payable. If they're not, and it's negative, liabilities over assets, that's a problem with your business. If assets are liabilities, you're at a better position for your business. So it's kind of again, balance sheet's more of a business snapshot, but it really helps understanding kind of the leverage of the business at this point. The third statement is cash flow statement. What a cash flow statement is basically it ties your profit and loss, basically your income statement, to your cash balance at the end of the month. So basically, what is on my P&L? Not everything in my profit and loss is cash ins and outs, and how that all that information ties down to my ending cash balance per my balance sheet. So it's kind of a reconciliation between the two systems, or between the two reports, P&L and balance sheet. And it shows it's a good impact because it's a good report because it does show what was my net cash for the month, positive or negative, where did it go, etc. So I guess in summary, your kind of key financial statements you should be looking at are profit and loss, balance sheet, cash flow statement every month. There's a ton of other ones to look at specifically. Those are the three. If you can get a handle around those three reports and statements, that's awesome. But again, remember, they need to be accurate and up to date and at a precise level of information for you to understand your business and make decisions. Hope you learned a few things today. Thanks for listening to Making Sense.